Okay, here we have a couple of dark clouds. The arrow on your left points to a hammer, which is support. And a little dark cloud cover. And notice how the market pulled back to the hammer support area, which is interesting. And then we had a dark cloud cover. Now, if you, and this would have been a perfectly fine trade that did not work out. It's going to happen. That's what stops are about. Okay. The hammer was support. Okay. Would we buy on the hammer? I don't know. It looks like a weak close. I probably would want to wait for a little extra confirmation the next day. Although the market's holding the hammer support, I don't like the fact it made a new low close for the move. So in this case, I probably would want to wait for extra confirmation. Obviously got that the next day. Now, if we do the trade or not, can we define what our target is based on the slide? No, we'd have to go back further. So let's assume it is not a good risk reward, so we hold off. And the market does this. What's the first sign of the market turning here? Small real bodies, right, spinning top. I don't think it's a shooting star because the lower shadow might be too long, but at a minimum it's a lower shadow. Okay. Gets a little above resistance, but then a little dark cloud cover here. Now the market pulls back here. Okay. Now one thing we'll look at later is intraday. You may have gotten a bottom reversal signal on a 30 or 60-minute chart. See? If you're using daily charts, you may not have seen that. That's one of the things we'll look at about intraday. I had said before why we could, if you're home during the day, that's the challenge. But if you have access to intraday charts, you may see, for example, on an intraday chart, you may see a hammer down there. So you might buy early. But let's say you bought whatever it is on the close here. It might be an okay risk reward because you're looking to the top end of the trading range. We get here. Probably sell it because of the doji. What's our target? Bottom end of the trading range, right? Okay. Didn't work out. You're out. Okay. So in this case, if you sold in the dark cloud cover, it would have worked out fine. Or if you bought on the hammer, it would have worked out fine. But if you sold on this resistance area set by the bearish engulfing pattern, remember, the doji is also resistance. So we had a couple of reasons for resistance. And the market closed above it. As soon as it does, if you're a momentum player, you're jumping from the long side. If you're short, you're wrong. You're out. Yes?
Is the candle right after the hammer, is that a bearish engulfing?
This one here? Okay. Okay, this is not a bearish engulfing because even if the black candle wrapped around the white candle, remember, a bearish engulfing pattern has to come after what trend? Uptrend, right. So that is not an uptrend. Okay. And we'll look at, this is actually a bottom reversal signal called a piercing pattern. We'll look at it in a minute. It's the opposite of the dark cloud cover. It's when a white candle pushes into the black real body, not quite wrap around it. Okay. And here we have a dark cloud cover. And I wanted to show you this because the opening and closing are a pip difference. So that's perfectly fine. The opening and closing doesn't have to be the same. In fact, what you may get, just as it opened a pip lower, it could open a pip higher also, or a couple of pips higher. Opposite of the dark cloud cover, just as the shooting star was the bearish counterpart of the hammer, the bearish counterpart of the, the bullish counterpart of the dark cloud cover is the piercing pattern. Market's moving down, non-Forex for you equity traders or commodity traders. Market opens below the prior low or at a minimum below the prior close over here, and then pushes above the middle of the black real body. Forex. Opening and closing are the same. But it still has to have that white body close above the middle of the black real body. Okay. Piercing pattern. And think about this also. Remember the dark cloud cover, we wanted a relatively long white candle, then a black candle, get into it to show a real change in psychology. Same thing is true with a piercing pattern. And this is perfectly fine. A relatively long black real body. It's not tremendously long, but it's not a spinning top by any means. And then a white real body to show us. And here, this one's interesting. See how it opened a little below it, the close? Okay. Here. See, most of the time it's going to open and closing going to be the same, but this is fine. And you may have a data source where the opening and closing are the same. That's why we can't get hung up. It's not like in equity where you have official prices. There's no official prices in the Forex market. Yeah. One of the great, I love Forex because it's so great, because when I do equity seminars, I'd say about 25%. How many sell short here on the Forex side? Yeah, I was going to say on the equity side, it's only 10, 20%, and that's after years of the market being down. Forex are like commodities. It's just as easy to sell short as it is to go long, and that's what's great about, another great thing about Forex. Okay, this is not a piercing pattern. Why? In that, yeah, right, didn't get 50%, more than 50% into the black wheel body, exactly. Okay, here we have a piercing pattern which confirms a support level. And interestingly, look at that support level with those two red semicircles on the left here. Okay, what are those? Two in bullish engulfing patterns, right. Okay, here we have a bullish a piercing pattern. This would not be a good risk reward. Great piercing pattern. It looks like it's really trying to bottom out. But based on those shadows, where's first resistance? We can't see the prices, but I think most of us will agree. Yeah. Right here, right? Yeah. So yeah, great piercing pattern. You can't do anything with it this time, but this piercing pattern is what? Is reinforcing a support level. I would certainly monitor that support level if the market gets back there, which it ultimately did. Okay. And this is, I love it when the market breaks support and can't hold it. I love it. We'll look at that. It's called a crack and snap. And it's something I talked about in my other DVDs. How many have my DVD sets here? Okay, quite a few. Okay. I call this a crack. I think my first DVD was called a spring, but I love this. So here, market breaks support and can't hold it. Okay. What do we have here? That long upper shadow. Is that a shooting star? No, there's really no trend to reverse. Yeah. One of the things, one of the challenges we have is the market in an uptrend or downtrend. Something else to think, to define the candlestick signal. Something else that will help us, and we'll look at later, is seeing if the market is overbought or oversold. So obviously, even if you, for some reason, thought of this as a shooting star, which you shouldn't, we should say to ourselves, is the market overbought? And you don't need an oscillator to tell you no. So this shooting star becomes less important. And we'll look at that a little bit later. We're going to look at a lot of stuff later, huh? Okay. Here we have a dark cloud cover. Now with that dark cloud cover, is the market just visually, does that look overextended at the time the dark cloud cover emerged? Yeah, I would say so. It's overextended. It then becomes more likely when you have a bearish candlestick signal for it to be reversal. Again, in spite of that, I wouldn't short on the dark cloud cover unless we had it confirming something else.
Steve,
yes?
Is resistance then the tallest wick there?
Yes, on the dark cloud cover. Any of the candlestick signals, great question. The question is resistance at the upper wick or the upper shadow. Whenever you have a bearish engulfing pattern or dark cloud cover, the bearish engulfing pattern, the highest high, including the upper shadow, or the dark cloud cover is resistance, the bullish engulfing pattern, the piercing pattern, the lowest low, including the lower shadow, becomes your support level. Great question. The question is, can momentum be substituted for volume? We could use momentum. When we talk about oscillators, we'll look at momentum. The way most traders will use momentum is seeing if the momentum is confirming the move. So I guess in that sense, you could use it as a substitute for volume, because with non-Forex, if the market's moving higher, we want to see higher volume. In Forex, if the market's moving higher, we want to see the oscillator, whatever you're looking at, stochastics, RSI, also moving higher. But unfortunately, I don't think there's really any specific substitute for volume. But that could be viewed as something that can be used as a last case scenario. What's that? Oh, the oscillators? Yeah, oscillators are a lagging indicator. We'll have a section on oscillators, and I don't ever recommend trading solely on an oscillator. It's only if we get a candlestick signal confirming it. To me, the best indicators are the candlestick charts. It's